G'day traders and welcome to my very first episode where I already realise I have screwed up because what I wanted to do at the start of every episode is read something from Atlas Shrugged, which is the book that really has inspired a lot of my viewpoints on the world and a very, very big reason as to why I choose to trade. Why I'm sort of tracking down this path and looking at it for financial freedom, for independence, for basically removing myself from a system after experiencing governmental control, shutdowns, lockdowns, all that sort of shit during COVID, which if any of you had businesses in countries like Australia or other authoritarian hellholes, then you will understand what I'm talking about. Let's get started with this part of the speech today. This is from the book Atlas Shrugged by Ayn Rand. If you haven't read this book, that is what I'm basing this channel around and information around. And if you're on this channel, you're probably going to love this book. So let's have a look. So you think money is the root of all evil, said Francisco d'Anconia. Have you ever asked what is the root of money? Money is a tool of exchange, which can't exist unless there are goods produced and men able to produce them. Money is the material shape of the principle that men who wish to deal with one another must deal by trade and give value for value. Money is not the tool of moochers who claim your product by tears, or the looters who take it from you by force. Money is made possible only by the men who produce. Is that what you consider evil? Now, let's go have a look at how I made money or didn't make money this week, which let's just spoil the party and let you know that I lost this week. I lost last week as well, but I'm still reasonably early in my trading. So I don't probably not a lot of people are going to watch this. I've been trading short-term, like day trading, swing trading for about 6 months. And my rules for my trades, my entries and the style of trades that I'm doing have changed a lot over that time period. And I'm just at a point now where I'm putting some actual proper money in. And my rules are just getting more defined. The last 2 weeks, even though I was up like 40 grand in 3 days or something last week. And then I gave it back through some bad decisions. That, by the way, the reason I wasn't happy with that 40 grand is because it should have been about 120, but I didn't stick to my rules. I wasn't clear on certain things, which I have since improved. As a result, this week, losing I think I'm down about 5 grand, 5, 6 grand, maybe 7. I haven't checked the total. But had I have traded like I did this week, last week, I would have made over 100,000 in that week. So even though I was down this week, I'm still very, very happy because my actual trading improved remarkably. I didn't miss that many opportunities, which was good. There were 2 bad trades that I didn't have an exit plan well defined for, which I'm going to go over that one first. So let's make this a little bigger. I think that will do it. Yep. Righto, now if you're aware of semiconductors, you may also be aware that they are fucking retarded. And just have a look at some of these charts. So this is the daily chart for SMCI, which isn't a massive company, but it's a chip company. And as you can see, this is 2023 in May. So in less than a year, it's gone from $90 up to almost fucking 600. That is retarded. Absolutely retarded for any company, but particularly a company that's making fucking chips. Right? There might be some of the fundamentals that I don't understand in costs, creation, products, services, but these are not things you need to survive. And this is one of my problems from a macro perspective, because I really enjoy macroeconomics. To understand the value proposition of these things is very difficult for me because it's not food, it's not water, it's not shelter. These are all sort of luxury enhancements. So just from a macro perspective, it doesn't make sense to me. However, what I am now doing after the past 2-3 weeks being happy enough to take shorts in these positions, I am no longer taking shorts against any chip, semiconductor, none of these fuckers, because it has been too much of a pain in my ass watching the short trades that should really play out quite well not play out. So the basic strategy that I am sort of using, if you can see my lines on these charts, is called the break and retest strategy. I've been following a guy more recently called Vincent, and he does options trading and tracks out brilliant education, and that's what I've found is to be quite effective for my style and my thought process in this. So what these lines are just showing out different resistance points. Resistance meaning where the trades have come into and then either rejected or held. So here you can see pop, back down, comes down again. Even this point you could maybe, because you can see there's a little point here where it sort of targets a bit, then it comes back down there. It's not strong enough for me, so I'm not super happy with it. I wouldn't be looking for a trade off that level. But it's come back here, boom, 1, 2, really, really solid. In the pre-market, solid. And then, playing around there. So my level of, and this is like a really key point. Usually when you get these 1, 2, maybe 3 times hits and then a break, you will usually get the stock to trace back. Because these people here that were all in this position, they have sold. And then people are buying up, and then a large group of sellers come in and they sell again. When there's a consistent rejection off one level, it means either the buyers or sellers are in control at that level. And basic rule of thumb, you trust the level until it breaks. Then, when it breaks, like it did here, this was my entry, this is where I lost. And reject, see, you can see this high point here, and it's boom, rejected off. That's exactly what I wanted. So what I did here is I was buying put options for, where was it? It was about 560 that I was buying, 561, 62, and it went up to 66. I bought put options for 555, so this level, right? And there was a couple of days till expiry. So I bought them up here, which means I was betting that my thought was the price would come back down to this line. That's what I was hoping for. Now, trade was looking great to this point. I was up about, I think I had about 4,000 in the trade, and I was up about 2.5 grand here. I didn't take any money, which is something that I'm changing in my style, off the table. And because you can see at this point off the 15-minute chart, we'll go through all of them. Off the 1 minute, oh shit, what have I done? Off the 1 minute chart, we're back in here. Usually I'll enter on the 1 minute chart, but I'll look to exit off sort of a 15 because I like the 15. It's just a little bit stronger. But you can see this 1 minute chart. Look at this beautiful candle up, comes straight back down, boom, red on the screen. At this point in time, I am very happy. I'm like, all right, cool, check back up. Yep, that's great. It's come back up to this level, rejected, coming back down. It's probably going to continue down. That's what I thought. It didn't. But I thought, okay, cool, maybe it's going to do a double check and then come back down. You can even see here, see how you've got these little tails in here, boom, boom. On the 1 minute, I like to see 3 of those at least before entering a trade, just because 1 minute's a lot more fuck aroundy and you can get faked out all the time. So I wouldn't enter off a candle like that. That's not enough. But here where you've got 1, 2, 3, and that sort of, I probably would enter on the short side there because it just looks, you got the solid level, constant rejection, thinking, okay, cool, that's probably going to go to the downside. Didn't. Now, I wouldn't enter here again because it's not a key level. Key levels for me are the ones that I've got the bars on. So I had a really good entry, right? First entry was there, second entry was in here, and I was like, all right, sweet, fuck yeah, boom, boom, boom. Okay, cool, this is probably consolidation up to this point, and it's going to continue down. And I was like, oh, fuck, all right, maybe it's going to go up and test it again, and it'll come back down. And it's rejecting, it's coming in, boom, this is a really hard rejection. All of those look really good to the downside for me. Problem, the big problem, even look at these tails. Like these tails are beautiful. You're just like, yeah, okay, cool. Fuck yeah, downside, downside. Let's go. I'm at the wrong section. Don't worry. We're here. This was the area. But you can see here, even these tails in here, they're above. So I was thinking, and they're in line with this one before. So when you're doing the day trade, I'm like, fuck yeah, this should definitely continue back in here, which was my target. That's where I was going to sell. And I'll be able to exit this trade from a very nice little profit. It would have been about 10 to 12 grand for me off risking 4, which I was happy with. Problem, didn't get to my level. And then it came back up here. It's rejected. This tail was a pretty clear sign that's probably not going to run out in my favor. But it still hadn't beat that level, so I was willing to let it go. And where are we? Why the fuck does it keep doing this shit? Stay on the fucking level. Oh, irritating. Here, that's the spot. And you can, even on this 15, man, for me, all of that looks really constructive to a retest down. It just didn't happen. And sometimes the trades don't sort of work out that way. It continued up. I didn't exit the trade because I was stubborn and I thought, fuck it. It should still come back down and retest that. At the very worst, it's going to come back down and retest this. I didn't get out of the trade. Ended up losing it all. So that was a fuck up, but I don't think it was a fuck up on my analysis, my entry, my thought process. I still think my thought process was good. What wasn't great is how I managed the trade. So what I've now implemented is when I am 20% up on a trade, so if I've entered at 4 grand, 20% up is like 800 bucks, I think, 800 bucks. So when I'm up 800 bucks, I sell a third of the position, right? Take a third off the table, take the profit. If it continues down to 50%, I sell another third of the position. So at that time, I will have made 50% on the trade, 50% in, which means it can go probably to about, it probably could have gone to about here, and I would have been even. And at this point, this is what would have saved me in this trade. I wouldn't have lost. I would have been about even, which for me means on my balance at the moment, I would have been about 4.5 grand more positive, which would have had me end the week about even, I think. What I would have done after I saw this break and retest, this candle in particular, I would have exited the trade here. I wouldn't have changed the position because I would have wanted to see another rejection down and then back up before entering on the upside. But I would have exited the trade had I managed this like I am now managing the trades with that. More strategic, very strict rules on taking profits off the table. So, annoying, but lesson. And that's something that I'm taking and moving forward so that I can use in my next trades, give myself less risk, less exposure, and ideally lead to more profits. That was my SMCI trade that I started on Thursday, and I tried to swing into Friday. It was expiring on Friday. It just didn't happen. Didn't happen, which is okay. Because when I made the trade, that was my rule. I was willing to lose the 4 grand because I thought 12 grand was my upside. So it just didn't play that way. Let's have a look at one of my winners for the week. IWM, actually, this was a beautiful trade. Fuck, I was happy with this. This was a really, really nice trade. Very, very happy. I missed it here. This would have made me a lot more money. Like I would have made about 10 grand on that. So I missed that. I had my level marked in here. Let's just go. I'll go to the daily so you can have a look at how I made these levels and get a bit more of an idea. So this is the level here. It doesn't show it as clear on the daily. Maybe we need the hourly. Hourly. Yeah, now you can see. Right, so you can see here, as it's running here, you've got boom, crash. It's wicked through, but it's gone straight back up. Come back, touch, come here, goes through, but gets rejected, goes straight back through. So this is holding as really strong support, right? Recently, last few days, boom, 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 boom. Hit, breaks through, and this is important where you know it's becoming a good level. You've got these tails in here, which is showing you that all these buyers that were pushing it up are now exhausted. And now it's coming into the levels, and this level is now turning into resistance, meaning sellers are in control. It's pushing down, sellers, boom, straight back down. Here, the sellers get lazy, buyers take control, and they're back in. But this level is still quite important. And it didn't get hit again for 1, 2, 3, 4, 5, 6, 7, 8 days. And on this 9th day, bang, crashes through, and then boom, rockets to the upside. That was my level. That was an entry that I missed, and that would have made me about 12 grand, that trade in that day. Had I trust? Actually, no, sorry, incorrect. It wouldn't have, because I would have actually stopped out here. See where it's come through, pulled back? You can see it on the shorter time frame charts. I went back and reviewed this, and I wouldn't have actually made that money here. See how you're getting those tails up? I would have exited. Would I have exited? Maybe not. No, probably not, actually. I don't think I would have, because you can see this tail up, bang. I don't like that rejection at that level, because that's the 20 SMA, which is just a strong level for charts, often acts as resistance or support. I didn't like that rejection, but there's not this massive consolidation underneath here, and you've got that tail up. I probably would have held it, to be honest. Here, where you get these two tails, I probably would have exited, so I would have exited there. I would have got in at the 192, 192.50, so I probably would have bought 93 calls. Within the day, it's gone up to 190. I would have sold at 195. Say I've bought 3 grand. Yeah, so I would have made six to 9 grand on that trade, but I didn't, because I didn't enter in. And then I thought, fuck that. Next time it hits this level, this is clearly strong support now, because it's bouncing off it. I'm going. Here, I entered. This was a good trade. So the next day we've come down. Now, it didn't quite touch the level. The reason I entered is because it's got close to the level and these wicks. So these come to, it just means there's very strong buyer support. So it's like, boom, they're trying to push it down. It's just not happening. You're getting wicks. My preference, so I wasn't 100% on this. My preference would have been this wick here to be longer. Because this one was longer, I wasn't as keen, but I did still get in, and I got in pretty low. I think I got in around the 192.60 mark. But my stop loss was under this. You can see I've got that level. So under 192, boom, I'm out. So I'm risking about 60 cents, and my target was the 20 SMA, because you can see you're getting this little hold here on that 20 SMA, nothing there, and then I thought that was going to act as resistance. I had it as a major level previously, but I took it off. But I was happy with that, because that was giving me like $2 basically and risking 60 cents. So you're sort of looking at the 3, 4 to 1 risk reward. Managed brilliantly, right? So I took in 20%, took money off the table, safe, gold. So when it's coming back down, I'm not stressing. I'm very calm, because as it comes back down, even if I'm slightly negative, which I believe that I was on one of these candles, I was slightly negative, it's very, very small, because I've already taken that 20% off the table. And if it went lower here, I actually would have been able to level up very comfortably, because I've taken that 20% off. So I could re-enter that 20%, which means I'm getting a lower average cost, which means if my trade and my thesis holds true and it continues up, I end up making more money. If it doesn't, I'm just safer, right? So my risk is lowered. That's very, very important. Then when it went up here, I think the first time I took there was a 50% profit mark here. I took another third off the table. So I was up about $700 or $800 here. And then it starts to chop around, hits this. I took the rest off the table around here because I was pretty happy, and it hit my target. It didn't seem to be pushing through. There seemed to be a little bit of rejection. I was happy with the trade. Boom. For me, that was complete. Now, yes, I could have made more if I held on to it all day. Not that much more, though. So I'm really pleased with this trade, this structure, the thought process, how I was thinking through it. This was a brilliant trade on my part. Really, really good. Really well managed. See these wicks. This is just fucking gorgeous. Really good entries. I waited on that first one. I wanted to come back down, retest, and go. It was brilliant. This was a really, really nice trade. And even though I'm not even though this week I didn't make money, because my decision-making process was so much better, I'm so much clearer on why I'm doing things, analyzing, thinking through it, buyers, sellers, who's in control, what's happening. I'm very, very okay with the loss that I took, because so long as I stick to these rules that I am now implementing consistently, my two losses, I'll show you my two losses that caused me to be in that position. SMCI, which was the first one I told you, this would have been zero. It would have been a wash, or I would have been slightly ahead. And I probably would have changed the position and gone up with it and made profit. The second loss was AMD, again, shorting. Where was my short? It was, again, this looked fucking brilliant for a rundown. It was here. So I shorted in here. I looked at this. This was a really key level. You can see support, bounce, break, boom, rejection, back down, rejection in the pre, rejection, back down. This is where I entered, right? I thought it was going to continue back down, and my target was down there where you've got this resistance before. So I was like, boom, this would just be great. Goes up, breaks it on the next one. It didn't. Broke it on this one, which sucked. I didn't exit because I thought, you can see these tails. And one of my rules is tails over targets. So I'm going to trust tails over any target price that I've got. For me, this constant boom, 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 I was like, oh, fuck, I think it's going to go down. So I was like, fuck it, I'm going to hold it into the next day. It rocketed, gapped up overnight, and there you go, I'm fucked. So I lost that trade. That was only about $1,000, $1,500 or something. So it wasn't as much. But again, my potential upside, what I was looking for, I was risking the 1,000, and I was probably going to make about 5 to 6. So 5 to 6, roughly odds on that trade. Had it played out to my thesis, let's say, had it gone all the way down, I probably would have made about 4. Still, very good. Understood the risk. I'm okay with that loss. I think, again, it just didn't follow my rules. So I lost. What I should have done, again, here, at this point, I was up 20% in the trade. Had I taken that 20% off, I would have re-entered here, but it would have been a lot less painful to get out. And I probably could have got out here for a smaller loss, like $500, rather than when I woke up, it just, actually, would I? I don't know that I would have entered here. I might have just waited. So it would have been a smaller loss. Wouldn't have been, like, instead of $1,500, might have been $1,000, something like that. But those two, with the current rules that I'm using now, would mean I would have finished the week even. Just those two. I had other losses that were just not great decisions to enter, which I wouldn't now because, again, I added different rules to improve. But they were two of the trades that I took that two that went bad. The IWM went well. I had a couple of other wins on IWM this week. It was actually performing reasonably well for me. I got out of a bad position that was a swing from last week. 3 bad positions from last week. So if you can observe the chart and you see that boom, break, retest comes down, like that is. It just seems to be very, very effective. It's something that I like. I like that you can analyze the probabilities. I like that the odds are in your favor. What I needed to be better with is how I was managing the trade, which I believe I learned that lesson this week. $7,000 lesson. Thank you very much. But if that $7,000 lesson leads to me making, next week, for example, if I make 20 grand just because of that lesson, that's a cheap lesson. Over the course of the year, that 7 grand, I would think, makes me well over $100,000. From the week before, some of the rules that I got, I believe will make me well over $1 million over the next 12 to 24 months, for sure. The other rule that I made for myself as it stands right now is I will not short the chip stocks, Nvidia, SMCI, AMD. I'm not going to short any of them at the moment because, right, take this. This this has been my biggest problem the last 2 weeks. Had I not shorted any of them and just all my bets still enter the same way, but only enter on the long side. Had I been doing this the last 2 weeks, I would have made about $150,000 in 2 weeks. And that's a bit painful to look at that and be like, fuck. And the reason I haven't been doing it is because I'm stubborn, which is great. I think I use it well most of the time, but it doesn't really matter what I think macro-wise should be happening or shouldn't be happening. Are they overvalued? Are they not? Do they actually really have a thesis that that justifies their charts, justifies the price? It doesn't fucking matter. They're going up. The market says they're going up. Now, you can try and fight the market all you want, like I have, and it's cost me a lot in potential profits, enormously. Because all my losses, basically every single one of my losses has been on those stocks and betting down. It's just, it hasn't turned yet. The markets have not turned down. So I'm not going to bet against them in those areas. I'm betting against the banks because I saw that banks start to collapse and I know the bank system's fucked. That's more of a macro bet for me. It's not a massive chart observation, but I would expect that I can probably make between 20 and 50,000 out of the 2 that I've got on at the moment, and I'm only risking 3 or 4. So I think that's really good trade, but still managing it the same way, which I didn't. How do I these 2 trades? This fucking irritates me as well because I had JP Morgan, I was short JP Morgan, and I'm short KRE, the regional banks, which I think is going to be the one that really go down. But JP Morgan, I believe, will go down. I've got some other. I'll show you this thing that I'm thinking through at the moment, what I've seen consistently. So let's go JP Morgan. I probably pulled the trigger a little bit early looking at how the charts finished up in January. This comes from an RSI analysis on the monthly. I've not heard anyone talk about this, but every time I've looked for it and found it, it has shown a 30% drop minimum, and usually you're looking at 50 to 80%. This is called a negative divergence. You can see it on this, I'll show you on this chart where it happened previously. Here on the chart, you can see where the price is, 117, and on the RSI, which is relative strength index, it's at about 80, which is considered overbought. Then you look on, right, where is the price higher? So now I want you to look at here. And you see how the price is higher up here, but the relative strength is lower by about 10 points. What? Now that takes from 2018 to 2019. So you're looking at, that's about a year, a little bit over a year to get that divergence, almost 2. And then the stock price goes from 141 down to 77. It's about a 50, just under 50% drop. So you're looking at 45% drop. And it's preempted by this divergence. Now, what I'm looking for is this divergence again. Well, you can see it here. There's a divergence here, just in this little one. That's not what I'm focused on because that's already happened, but might as well do it again. 164, 172, that was the previous all-time high. Small divergence, not as big. I prefer sort of closer to 10 points. 73, let's say, to about 71. So you got a 2-point divergence. And then the stock price drops from 172 down to 102, which is around the sort of 40% mark again. Now, the price is higher now than it was back in 2021. So this is the mark I'm using. You've got the RSI at 71 back there. It is now at 64. And you've got new all-time high prices, 176. So my thoughts would be a 40% drop from there, brings us down to about that 1.15 mark. So I have bet short. I bought puts for 165, which if it gets down, I mean, even to this 140 level, doing it in April because there's the Fed's cancelling the bank term funding program. So if a few of the regional banks go bust, again, there still will be a drop in this, even though JP Morgan long term is going to benefit. I know I would actually buy longer term call options on it because you can see this was the crash in 22 or something. What was 22? I don't remember. Where's March? This one. So this is SVB crash down to 124. That's probably the level I'd expect it to come back down to. But this is April 23. Less than 12 months later, you have a 50% growth in the stock, almost 50%. Like that's fucking huge to the upside. So how I'm planning to play this long term, two main trades. My first one is short, which my expectation is around the sort of 130 mark, but I'll be taking my 20% off, my 50% off, and then I'll let the rest run. And then once it crashes, what I will then be doing, once you get a couple of these wicks, right? A couple of these clear sort of bottoms, then I will be buying longs. So I'll be buying calls at, I don't know, whatever it is, 10 bucks above the current price or something for 6 months out. Because I think in 6 months the price will have recovered and it will be moving quite well. That's my thought process behind that trade. Sorry, I didn't make that chart bigger. That's my thought process behind the puts at the moment and what I'm doing there. But 2 days ago, both those trades were up about 30 or 40%. I didn't take money off. And on Friday, they ended being about even. Now, had I taken money off, I could have scaled up both, being in for a better average price, and I would have been back in, and it just would have made my entry price better, and make the trade just a lot safer for me. I didn't do it. That's a fuck up. So I've just added rules, changed it, and also that along with those other two, the SMCI and the AMD loss that I now have rules to protect myself against, all that together would have led me positive for the week by about $1,000. Not a big week by any stretch, but just would have led me positive. The other rule, if I'm never betting, the rule that I've got now, never betting against the chips or semiconductors until I have 5 losing trades in the upward direction. At that point, I'll be willing to go short again. Yeah, like it would have been I would have made over 10 grand last week with those rules. So what I'm looking at doing is making as few rules as possible, very simple, very clear, very easy to follow, that are going to protect my downside and scale up my potential upside. That's literally all I'm looking at doing. That's what I'm looking at creating with this, because I just want to make fucking money. I just want to get rich. And well, you know, I'm probably, by most people's definition, you would consider me rich already. But I want a lot more. So that's what I did last week. That was sort of my trade reviews down for that week. It will certainly improve. I'm really excited about this week. I'm doing these videos for me. They help me talk through my ideas. They help me understand my thought process, what I'm doing, and they're going to reinforce the rules that I'm doing. If you end up watching this, you'll probably watch it when I've made a shit ton more money on trades than what I have already. But I would encourage you to go and do something similar. Go and make some videos for other people to watch, but don't do it for them. Do it for you, because it's going to help your thought process. It's going to help you understand why you're making decisions. It's going to make you clearer on your decisions, your discipline, thought process, and it's going to help you become more successful. So I would encourage you to go and do that. This is something that I plan on doing every single day now. I'll do it with my trades. I'll do educational pieces, whatever it is. The lighting, all that sort of shit isn't going to be great for a while. And like I said, I don't give a fuck, because I'm doing it as a tool for me, If you find value in it and it helps you, great. I hope you go and fucking make a shit ton of money. And I hope you keep learning, keep pushing yourself. Just go get rich. Fuck the governments. Fuck cunts trying to shut down your business. Fuck being like broke and worried. Like just go get rich. It's these guys. So much of this shit that is happening is bullshit. So much of the system is bullshit. Who cares? That's what it is. Use it for what it is and go and get fucking rich so you can go and create the life, the type of world that you want to live in more easily. Don't do it for the love of money. Money is not what you should be chasing. You should be chasing the options and the choices that money gives you. This is my choice of tool to go and do this because it's very, very easy to scale. Businesses, a lot harder to scale in a very short period of time. So, leave it there. Drop a comment, like, subscribe, all that sort of shit. But comments are really good. So if you can drop some comments, it helps me sort of circulate the videos and build this up. Let me know more of what you want to see. Breakdowns, lessons, learning, all that sort of jazz. I'll see you on the next one. Peace. Peace. That's not me. Cheers. Cheers, traders.